Good morning, everybody. My name is Nicholas Teo from CMC Markets here in Singapore. A few things to highlight today. If you notice this part of the screen, it's all green this morning. China A50 is up 7%, Hong Kong 43, which tracks the Hang Seng, is up two and a bit, and China HS index are up about 4-5%. Now, these are all futures prices, and it's really been a rocky ride. Late Friday, all these three indices or the futures were actually sold down very hard, and this happened actually after cash markets closed. That's why if you were to follow cash markets are reasonably flat, but essentially all these markets were sold down by as much as what they are actually being bought up right now, as you see on this chart here. This is because of several introductions or several announcements that came over the weekend. The first, late Friday after cash markets closed, suggests that regulators down there, namely the CSRC, may be coming up or came up with a few curves that they announced that suggest that they are currently perhaps a bit worried about what we have seen in the froth in Chinese markets. Now this followed by a Saturday's report or announcement that the PBOC chairman, Mr. Zhao Xiaochuan, had also highlighted to reporters that while China has all the room to move in terms of further easing, they may not necessarily do so. And then last night, late in the evening, we saw PBOC actually cut rates, cut RRR rates in this case by as much as 1 basis point, rather 100 basis points or 1 point. Now this is a huge move, and essentially it frees up as much as 1.2 trillion yuan into the system for banks to actually lend. It's also a very strong market mover on the positive side, and then this is clearly what we are seeing down here. This whole series of moves is highly confusing, and it's highly contradictory, if you may. I wrote in a little bit of detail on this in our daily piece. Please refer to it. Another thing that we are following is actually the dollar Sing. As you see down here, the dollar Sing is actually testing its low in the early of April. Its early low of around 1346 level. Now this sell down that we've seen started up early Tuesday last week on the back of actually stronger than expected GDP numbers in Singapore. Now, on Friday we got another major boost on this number when the Singapore NODX or non-oil domestic exports came in slightly stronger than expected. This caused this level to be broken. However, we're seeing that possibly it is still trying to bounce off this level again. Later this week, when Singapore announced their industrial production numbers, we may see further support on either side of this number, which could ultimately lead to either a rebound or potentially further move on the downside if those numbers come in actually quite strong. Where stocks are concerned, some of the names that we are following continue to be ComfortDelGro. ComfortDelGro saw a big leg up on Friday. We are seeing a continuation of that perhaps being played, something that we are following because of the potential announcements of the new Transportation Act. And also Keppel Corp. They announced numbers late Thursday, and we've seen a sell down that's still continuing. We're seeing the gap here being closed. Potentially we may see levels on the downside being tested, which includes this level of around 910 or so as a key support. If this holds, we could then again see this number, see the stock bounce back up to around the 954 level once more. Essentially they announced numbers that were flat in terms of earnings, but they also highlighted the plight in terms of not being able to announce any significant gain in terms of contracts this year so far, which is actually of key concern, seeing how the oil market or their clients who are traditional rig owners have no motivation to actually order new rigs, as the oil sector actually looks rather murky still. Anyway, a few things we are following on this busy Monday morning. Thank you very much.